Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. We're going to start off like we usually do. And I love this quote. I happened to see it the other day. And a person who never made a mistake never tried anything new. And let's face it, when we come to the market and we start trading, we make lots and lots and lots of mistakes. And really, I mean, part of the goal should be to minimize mistakes. You're still going to make mistakes. It's no different than life. I mean, let's get real. We make mistakes our entire life. And the ultimate goal, I think, is to make fewer and fewer mistakes or make smaller and smaller mistakes. And I don't want to, I kind of hesitate to say that, or maybe I should backtrack. I don't know what you want to call it, but making mistakes are no big deal. And I don't want to emphasize and look at and focus on mistakes, but let's accept the fact that they're real. We make them. And so the goal to minimize mistakes isn't to focus on minimizing them, but to focus on correcting them so that we don't do them again. I know it's kind of parsing words, it's splitting hairs almost, but sometimes that subtle little difference is all it takes. Sometimes it's just a little tiny difference in how we think. A little tiny, even just a word can change everything. Sometimes just a letter can change everything. So let's not focus on mistakes. Focus on getting better from each mistake. Focus on making a mistake a positive thing. Focus on taking it and learning from it. If that makes sense. Hopefully that all made sense. So with that, let's get right to it. I'm going to wrap the market update and the big guys into one session. Market update looking at the economic events. And we got mortgage. The big thing this week is going to be not earnings, but I mean, obviously we're in earnings season, but unemployment data coming out Friday. Now, there's crude oil inventories. That could obviously affect the oil sector. Initial jobless claims on Thursday, and then, of course, on Friday. FOMC member Mester speaks. I don't even know who that is. Non-farm payrolls, participation rate, unemployment rate. So that all comes out on Friday. So who knows what that's going to bring or what it will do to the market, but we will see. And as you can see, Friday was actually a big up day. That hammer pattern that we had a couple weeks before that obviously has played out with respect to a reversal. And no huge surprise. I mean, we do have a Maribozu, as you can see, that candle. In fact, let me zoom way in here. No shadow on the top, no shadow on the bottom. A decent size increase in volume, which actually makes things look pretty bullish. The question is, how long will that stay? And will it create another bullish run? Are we really going to go to the upside here, or is it just a retracement after this big giant drop? I mean, 2,100 to almost 1,800, that's 300. That's a 15% pullback. That's pretty solid. In fact, it is as big, if not bigger, than the one back here. It's just this one took place in 4 or 5 days. Here it took about 3 or 4 weeks. So I think a retracement is normal. I think about to the 50% mark, somewhere around 1950. It might run to 2,000. That wouldn't be a surprise. I think 1950 could be a point where it slows down. But if it doesn't slow down there, it's probably going to run to 2,000, and then I'm going to guess that it will roll over about 2,000. I don't see it running back up here to 2,070 because, I mean, we basically have that trend line here. You could put this right here. I don't know that it's going to get all the way back up there. Obviously, it could. I mean, we don't know it's 50-50, but just trying to lay out a vision and plan for it. I see 1950, and if it breaks there above there, looking at 2000, then it's probably going to slow down there. The faster it goes, if it runs to 2000 over the next 2 or 3 days, I mean Monday, Tuesday, Wednesday, maybe, then I think the higher the likelihood it will stall out and then roll back over. And obviously, there's so many factors, it's hard to say. But again, just trying to plan ahead and think out into the future of what may happen and be prepared for the possibilities. So we'll see. We will just have to wait and see what happens. But just pop through the other markets. NASDAQ looks almost the same. Industrial's the same. Transport's kind of the same, not as dramatic, but basically the same. And the Russell basically is the same as well. So all the markets essentially are going in tandem. The VIX, as you can see, is dropping back off, which is no surprise. So with that, let's get to the big guys. And AAP, I'm actually going to drop out of. For some reason, I left that on the list. I don't know if it accidentally stayed checked or what, but sometimes that happens because you can see the trading plan. Unless, you know what, and this is this is called being human. It's what we do. I'm starting to think that maybe I was going to actually move that plan upward. In other words, we're going to take this and go up here with it. I'm starting to think that maybe I was planning on doing that. That's what's funny is sometimes you mark things and then you go, well, I'll get back to that. You come back to it and you don't remember the original plan. I don't know if that would be a solid move or not. I mean, that's still, I mean, even if you get in 155, that's about 5 points, $160 stock, $155 stock. It's not real big. Is it worth it? I don't know. I'll let you decide. Earnings is coming up here too in just a week or two. Well, let's see, the 11th, which is a week from Thursday. So, yeah, kind of iffy on that. So I'm going to skip over it. I don't have the exact numbers in there, but if you're interested, go for it. You know, absolutely. Another one here, Alaska Air. Nice little bounce here. Bounced on that hammer day, which happened to coincide with earnings for Alaska. So interestingly enough, they came out and earnings bounced it, obviously, pushed it higher, rolled down for a few days, and then Friday we had kind of a bullish engulfing pattern. Not a lot of volume. I mean, a little bit less than the average, at least the 4-week average. So not terribly excited about this. It has to pull back realistically to justify getting in. So we'll see what happens with it. That's one to have to wait and see. Anthem looking for a bearish move. The bounce actually on Friday was not unwelcomed. I mean, you're having a 4-day drop like that from 142 to 127, a 15-point drop, basically 10-12%. A little bounce is good. So I'd kind of like to see this thing dance around that 127 line for at least a couple days, if not the rest of the week, and then have it break down. That would be more ideal. Alibaba, similar type of thing. We've got the big drop-off from back here in December, first part of the year, and then it went sideways for a week and a half, and then kind of a bearish engulfing pattern on Thursday. Not technically because it's at the end of a sideways move. But at the same time, it gapped up big. I guess that wasn't earnings. It gapped up big and then sold off big. So even though it's not technically a bearish engulfing pattern, I would treat it that way. And then we got the little kind of a spinning top. It's a little bit bigger than I'd think for a spinning top, but definitely a bearish look right here. So if it breaks below that 67.20 area, then I'd say we're probably off to the races to the downside. And having almost $5 of potential on a $60 stock, I like it. That's what, 7-8%. So probably anywhere from 50 to 100% rate of return on the option if it hits the target, depending on which option you buy. Very similar here on Bristol. Almost identical to BABA. It's interesting. It's just not as dramatic a move, not as big, but almost the exact same thing. This one's earnings related, though, for sure. We can see earnings there. So a little bit different story there with Bristol. DuPont. Now you can see, and typically this thing used to be, or at least maybe that's just me remembering, but it used to be super gappy. It seems to have settled down a little bit, partly because DuPont, as you can see the name, it's I want to say it's a French company. But I don't know. I mean, obviously it's an international company like so many are today. And mainly because, I mean, it's easy to transport things. You can get things manufactured in China and bring them over by the shiploads. And cost effectiveness is there. Makes more sense to do that than it does to manufacture here because labor costs are so darn high here. So, because Americans are spoiled and they want to make more than they really deserve. maybe they don't. I mean, a lot of people do deserve what they make. But there's a lot of whiny people in this country that think that they deserve to make more. So I live out in the Seattle area. These people in Seattle are just a bunch of, I hate to say this and I don't want to get too political, but they're a bunch of bleeding heart liberals who say, oh, you need to earn a living wage. Well, if you want to earn a living wage, then create a skill for yourself that you can earn a living wage. To go out and force employers to pay people a minimum wage that's so outrageous that you can't survive is ridiculous, but it's what it is. I mean, people vote in politicians that force things down our throat. And these people aren't bright enough to recognize that somebody like a McDonald's, their most expensive monthly outgo is labor. And if you increase their labor cost by 50%, what do you think is going to happen to the cost of their product? It's going to increase by 50, probably more, actually, realistically. Because you got L&I and all the other junk on top of it, it adds 20%. So you're going from basically about 11 to 12 bucks an hour up to about 18 to 20. That's almost a double. And you have one of two choices when that happens. Either get rid of the labor, which is what McDonald's is doing. They're putting in iPads and computer screens, touch screens. You can go in and order. And then they cut their labor costs. You buy a machine one time for $2,000, you don't have to pay it wages. It's not stupid on McDonald's part. And then everybody's going to whine about that. And they're going to start crying and whining about that. It's just, I don't understand how people don't get it. It's really very simple. It's just, it's price fixing. It's no different than the government coming in and saying you can't charge more than $4.99 for a gallon of milk. It creates all kinds of manipulation and all kinds of problems in the market when the free market doesn't work. When you don't allow the free market to work, the prices go up, things get weird, and corruption comes in, and all these problems start to happen. And I can't comprehend how it's so difficult to see. But then again, here we are getting off into some political stuff, but that's okay. I don't even remember how I got off on that rant. I found a squirrel somewhere, but DuPont, international stuff and all this other stuff. But anyway, DuPont looks like it wants to bounce here. I mean, it's been so beat up, it's so oversold that I would say the likelihood of a bounce here is pretty good, and that's really all I'm looking for is a short-term 1 to 5 day bounce. I'm not looking for an uptrend. The trend is clearly down, especially in the short term. The momentum is to the downside, but a quick pop to the upside could be some a decent profit there. Deere and Company. This John Deere, you can see it's been going sideways here for months. It's broken out of the middle point of the range, looking for it to maybe run up to about 80. Some pretty solid volume on Friday, pushing back higher. So we'll see what Deere brings us. Dollar Tree. Dollar Tree is, and again, we've talked about this here many times, where when the economy is weak and things aren't trucking along that well, companies like Dollar Tree and Walmart do well because it's an inexpensive place to go. It's a value proposition that when people need value, they need the best bang for their buck. That's where they go. And you know what? It's crazy. I hadn't shopped at a Dollar Tree until probably a year or two ago. But I go into one of these places and I look around and I go, this is the same stuff. I mean, Kleenex and toilet paper, the same stuff you can get at Safeway or Fred Meyer's or Walmart. And it's $1, where it's $1.50 or $2 somewhere else. And then there's other things like baking soda, which why are you buying baking soda? Well, I do cook, and then also when you have puppies, they aren't potty trained and they pee inside. Usually baking soda is one of those things that soaks up the extra moisture and smell. So I've been using that a lot lately with 2 little puppies.
Attention, an alert target has been reached.
Pay $1 though for baking soda at the Dollar Tree, when at Target you can get it for 79 cents. So some things are overpriced on, but a lot of things are not. And it's weird because I never thought I would shop at a Dollar Tree. And I don't know why. I just had never been into one. It was never really convenient, but now there's one closer to me. And I go in there and there's a bunch of stuff I get there. It's just awesome. They have batteries too, which I've tried, but the batteries stink. They're $1 battery. I mean, you pay $1 for a pack of batteries. You pay $6 for a pack of batteries somewhere else, and there's a big difference. So some things it's worth it, and other things there's not. So, but I mean, tissue is tissue. Toilet paper is toilet paper for the most part. I mean, if it's the same brand or it's close enough, it gets the job done. So maybe not the best time to use that phrase, but whatever. Hey, we're getting off into everything today. Anyway, looking at Dollar Tree, it is breaking to the upside. It's broken out of that resistance level, as you can see. The downtrend that's been in place for a while, it's not extremely solid, but it's been there for about a year. and it basically just broke out. Plus, it broke out of that. It did. It broke out of that resistance level, the horizontal resistance. So, looking for a decent move to the upside on there. I think it's pushing the bands as well. Yes, the bands have been pinching. It just pushed out of it Friday. So, love the looks of Dollar Tree. Edison, same thing. Notice the bands there. It pushed through. Edison's running, and it may be too late for this one, but because it already ran through on Thursday, and then Friday it gapped up and then dropped off a little bit, but it was still up for the day. So that one will have to wait on Edison. ESRX, Express Scripts, little piercing pattern. Right, gap down on Friday, rallies, gets through the halfway point, gets through the midpoint of the previous day's candle. So this day right here, as long as it crosses the halfway point, we have a piercing pattern, which is a bullish reversal. We had a hammer. Second day, it went sideways for a little bit. Now we've got a piercing pattern, and a lot of times this is a very good sign of a quick bullish move to the upside, which dropping from 88 to 70 in a few days. It wouldn't be a surprise to see it rally back up to approximately the halfway point. I mean, as you know, I'm not a big fib guy, but at the same time, they can be very effective. The midpoint is one thing. I don't necessarily look at fibs, but the 50% mark is something that is very common. So the 50% mark here is 77.74, so pretty close. So having it come up and hit that old resistance there would be no surprise. I've even mentioned it here. I mean, hitting the halfway point of the drop or the rally. And that wouldn't be a surprise here. And that's really what I'm looking to take advantage of. It might even go, you got this open window right here, this gap. It very well could blast right through here and go fill that. So depending on what the action looks like, if it gets up here and it looks like it's got some momentum, I would leave probably a quarter to half the position on. If it rallies to 78.62 quickly and it's got momentum behind it, I would hang on to a decent-sized portion of it if the action looks good, because there's a decent chance it'll run right through it and run up to about 84.85. So we will see. Entergy, I should say. Slow down a little bit. I'm getting excited. I don't know if you can tell, but I just noticed that I've kind of sped up a little bit because I have gotten a little excited. This one already broke out. We have this nice, beautiful ascending triangle. Obviously broke out on Thursday and rallied. Hit the target on Friday. Gapped up and tapped it. So if this pulls back, we've got the nice ascending triangle, and the reality is that most of the time these will pull back and tap the old resistance level. That's the conservative entry point. So looking for this to come back to that point, and then might even look at a longer term trade, because this could be something that over the next 2 or 3 months runs all the way up to the top end, which is up there around 76. So we'll see what that brings. Foot Locker. Never terribly excited about resistances bouncing down, especially if the market may get bullish, which it's looking like it wants to. So who knows? This might break out to the upside. I wouldn't be excited about a breakout because it's already run so far so fast. I would be looking for this to drop off, but I'd be a little skittish with it there. HCA, another one that it's been basically just going sideways for the past 3 months. Earnings just came out and it really hasn't done much, so kind of iffy about this one just because it hasn't moved a lot. Illumina. Well, I love the looks of this. This has not been hammered like a lot of stuff has. Of course, it's a pharma. But Wednesday, Thursday got beat up pretty good, accelerated on Thursday, and then Friday had a little bounce to the upside. Of course, we do have earnings coming up here tomorrow. I don't know if it's before or after the market, but we've got to be aware of that and probably have to wait on it actually and see what happens. So this may be one of those things that we just missed the trade altogether. L Brands, which is Victoria's Secret, Pink, and any other thing that they own, any other clothing line they own. Starting to look like it wants to push up and approach that 100 again. It wants to test it. The only challenge is it's already $1.50 above the entry point. So have to wait for that one to pull back a little bit. Netflix, one that I haven't been on the radar a whole lot, but did a 7-for-1 split. I didn't forget about it, but I just haven't looked at it. It was over 700. I was going to say this used to be a lot higher. But it's broken that. That's what I was looking at. It's broken that support level right there, about 95, and it's a decent amount below it. And there's not much below it to stop it. We can scrunch it down like this. The next point is 70. I mean, that's a 20-point move on a $91 stock, $91 entry point. That's huge. So there is some very significant, very serious downside potential on Netflix. And so whether or not it happens remains to be seen. But if it does, obviously that would be a monster home run. And this is something I'm going to look at, keeping an eye on, and seeing if maybe a longer term play would make sense. Looking at 6 months worth of time, if not a year, maybe even next January of 17s, and just ride this thing for 6 months. And if it gets to 70, or if something terrible happens and it drops to 50, then oops, maybe even more. So Netflix has some killer potential. Nike was looking at a bearish move on this last week, and now it's turned a little bit bullish. It is a tiny bit above, about 20 or 30 cents above the entry point based on Friday's close. So we'll see what this week brings. And if we get an opportunity to get into that a little bit, not sure that it will run all the way back up to 66, but you never know, right? So the only way to find out is to get in and hold on and hope it takes you for a ride, and the ride is as good or better than you thought it would be. So Phillips 66, obviously an earnings move on Friday. We gap down in the morning, drop way off to, 76 basically, and then rally back up and close about 80. Pretty solid spike in volume. So it's been building a nice little base, and with that candle, the action on Friday, wouldn't be surprised to see it take off and run. And realistically, Phillips 66 has been steady, even though the oil has been getting trashed. This thing has stayed up and stayed solid. Not sure why. Obviously, the business itself is there. Very similar picture with Praxair. It's been dropping off for a while, a few months, builds a little base for 2 or 3 months, and then boom, a big bullish engulfing pattern at the bottom of that base, which also coincides with another support level. So, and we have earnings that helps to catapult that. So looking for this to possibly run and take off to the upside and bust right through that 100 mark. Oh, interesting. I just noticed it closed right at 100. But if it takes off and rallies right through it, then there may be an opportunity there. Signet. This is a jeweler, interestingly enough. Notice we have a hammer type of pattern along with a Harami type of pattern right after dividends. The stock breaks a low there at 117, big time, with pretty solid volume with a big candle, and then rallies back, leaves that hammer. So I'm looking for this. If it gets back above that 117 line and it starts to move bullishly, I mean, it might have another move like it had back here just a few weeks ago. And that's really kind of what I'm looking for. And having, 12, 13 bucks of potential, not too shabby. So it's about a 10% move. Not sure whether or not, we never know if it's going to happen or not, right? So we just have to pretty much get in and see and wait and just adapt. Tesla Motors, almost a similar picture. Not quite as pretty as far as opportunity to the upside, but it has been pretty beat up. It was 240, 245 just 3 or 4 weeks ago, and now it's basically hit 188, almost 180. So it looks like it's pretty oversold. Wouldn't be surprised to see a big rally to the upside, especially if the market gets bullish. If it continues the run that it had on Friday or continues to do that this next week, then I wouldn't be surprised to see Tesla go right along with it. How far it goes up, hard to say. 207 is definitely a spot to be cautious with, because obviously you can see that's where there was some support there before. In the last two, WAB, Wabtec, no idea. Oh, this is Capital Construction Heavy Machinery. I'm not sure. Obviously, they do construction heavy machinery, but I've never heard of them. Not that I recall, at least. So clearly, downtrend. We've dropped from 100 down to 61. It's built a nice little base the last few weeks. Popped up on Friday with some decent volume, so it's already a little bit above the entry point. A little too much. If it dropped back about 40 or 50 cents, I can see winging it and going a little bit, taking a small position there, but. Obviously, when something gets this oversold, and I think it's even worse than that. You can see how beat up it's been. When something gets this oversold, it's not surprising to see a big short covering rally come in. Where people come in and start to buy it up because they go, hey, just 6-8 months ago, this thing was $100, man. It's worth $60 is a great deal. I liked it at 80. Now it's at 60. Let me get a bunch. Sometimes that happens. Sometimes it doesn't. And if it does, and we can catch that ride and run that wave to the upside while people are getting excited about it, then awesome. If we don't, then we can catch the downside. Realistically, there's a darn solid downtrend on there, and it hasn't broken out of it yet. So, but the reality is it very well could break out of it on Monday and push to the upside. So we'll keep an eye on that. And last but not least, Walmart. Big break to the upside on Monday. And this is another one that even though, just like Dollar Tree, even though Dollar Tree and those kind of companies have done relatively well and are either near or breaking out to new highs, Walmart is one that a lot of times will do well in bad markets too. But we've also dropped from, a high of 88 down to 56. So is it oversold? Looks kind of like it is. But at the same time, was 88 an overextended value? Because it certainly looks like it was. Looks like a fair value is more in the $60 to $75 range, somewhere in there. This is where people are comfortable. You can see the sideways action between 68 and 75, basically 76, for 13, almost 2 years, year and a half, 2 years. It just kind of bounced back and forth. So that's a comfortable price for people. So to come back up into that range would be no surprise at all. But we will see. Looking forward, that's one of the things here is you got lots of stuff pushing the bands like this, and Walmart's no different, and it very well could just walk those bands right up to 71, 72, 73. So if that happens and we can jump on it and take advantage of it, awesome. If it doesn't, so be it. That's trading, right? So there we have it. So it's the start of the week, and we'll see what happens. So y'all have a great week, and we'll talk to you very soon. Bye-bye.